and he shows them a pearly white.
Happy Wednesday. How you doing today? Hope you guys are having a good day out there. This is just a quick show we do called The Closing Beat. We do it for our customers here at Jazz Wealth, as well as those of you that want to come and play along. So happy that you're joining us here. I appreciate that. And thank you to all of you that have joined us at Jazz, transferring your accounts and opening your accounts. I get it. We're a small fish in a big pond. We've got a lot to prove. And hey, that's why we're here every day, right? Let you know that we're actually working. If you have a financial advisor somewhere and you haven't heard from them in a while and they just don't do classes, they don't teach you, they're not reaching out with ideas and thoughts and not willing to help with your plan, well, I hope you'll keep us in mind at Jazz Wealth. We do things differently. We actually manage our own portfolios. You can see the performance and everything right on the website. And of course, you're welcome to schedule a call. Ask questions if you like. We're happy to help. Let's talk about the stock markets today. Oh, before I do that, we have a class coming up tomorrow. Every week we do classes for customers. Last week we did one on options, just a basic sort of how do options work, what in the world are they, and what can you do with them. Real simple explanation. We'll probably be expanding on that in the future because a lot of people seem to really like that class. But this week our class is going to be on the portfolios and the stock market, all the sort of historical and forward-looking stats, as well as how our portfolios did and any adjustments that we made. So that'll be tomorrow live in the dojo. All you have to do is be logged in and poof, right at 8 o'clock, it just pops up and tells you we're live now. So you can come join us. Really cool feature that we built out. And we're working on a lot more for you guys. We're also playing a game. It's called Guess the Dow. If you want to go jazzwealth.com/guess the Dow. No strings attached. You can go guess. Tell me where you think the Dow is going to close next week. And if you're closest without going over, we'll send you a $100 gift card. We just reloaded on those gift cards there. So we've got a bunch of them to send out. Go place your guess. We don't sell your information. We don't market to you in any way. We probably should. We probably should do some kind of email list, but yeah, we just don't, right? So you're welcome to guess. The only email you'll get from us is if you win. So you take a guess there, have a good time with it. So far, so good. All right, stock market today, the Dow up 92 points. The S&P only gained 2. Anytime there's a difference there of more than 10%, we tell you, well, check out, what's the reason why? Or not by 10%, but typically, when the Dow's up like 90 points, the S&P will be up 9 or something very close to that, so 1/10 of it. And so that's what you had today. The NASDAQ down 3 points. Let's take a look over here at the charts. Here's the S&P 500. You're sitting up here at highs, just floating around. It's been kind of a boring couple of weeks here. Sitting at highs, typical this time of year for volatility to drop a little bit, for volume to drop a little bit. Overall, back and forth daily ranges tend to drop. People are getting ready for Thanksgiving. The weather's changing. People moving a little bit slower out there. We're getting ready for the holidays and stuff. And so the market sits here plainly at highs. We did have a little bit more volatility today. Wall Street Journal and the Dow Jones, I believe, reported a little bit of a snag there in the trade discussions, but most people kind of felt like, all right, well, phase one's still going to get signed. We're going to work this thing out. Wall Street Journal said that they were stuck on the details of the amounts of the agriculture purchases, as well as some of the enforcement that they would focus on for some of the tech, the problems that we've been having with them. So that was out in the news. You also had Jerome Powell testifying before Congress today. He basically said that their monetary policy is going to stay just as it is. We're happy with things the way they are, unless the economy or the markets change. They are not going to change, so very likely things are going to be kept the same. I've been pointing that out the past couple days, all the Fed members going out there and kind of trying to set that tone to get people to realize we're not going to cut rates anymore. They're pretty much as low as they're going to go for right now. You also had consumer prices come in a little bit higher than expected. It was just a touch negative news there. Didn't get a lot of attention. A lot of the increase in costs for consumers came from healthcare. And so a lot of people kind of overlook that. I'll bet you that that's going to be a talking point for the upcoming elections as we go into them here. So we'll see what happens there. Anyways, looking at the S&P 500, we have not had a pullback of 10%. We're going on a year without that happening. Did you know that the S&P 500 pulls back 10%? 0.9 times a year. We just usually say once a year you get a 10% pullback. Well, we haven't had one this year at all. We've had 6, 7, and 8% pullbacks, but we have not had that 10% pullback so far this year. There's still time, right? We haven't quite hit that year's deadline just yet. And so actually, this is the red line here is the 10% pullback. which will now be right about there. So that gives you an idea of how far we'd have to actually fall to hit that 10% drop. The last time the markets did not fall 10% in a given year was 2017. In fact, in 2017, the stock market never fell more than 3%. Get that. So all year long, just trending higher, never fell more than 3% on the year. So far, half of all of the days this month have closed at record highs. So it'll give you an idea of, you tired of seeing the word record highs? Like, thankfully, that's not a drinking game or something, or we wouldn't be able to do this show. Half of all days so far have closed at record highs, 6 of them in just the last 12 trading days, which takes you back into October. That puts you at a total of 19 for the year. So for 2019, we've had 19 record highs. And given that we're pretty much at record highs, you got to imagine there's going to be more than that as we go into it here. And just if you're curious, I don't know if you like these sort of things, but the most ever amount of record highs, record closing highs that we've made, meaning we hit all-time highs and closed there for the day, was in 1995. We hit it 77 times, so we're well off hitting any kind of record. There's just no chance we can hit that record before the end of the year. So gives you a little background to see, give you an idea of what's going on there. Overall, in the overall sectors today, you had utilities get a little bit of a bounce. They've been sold off here in the short term. We've talked about that sort of oversold nature in utilities. They got a decent bounce today just as that volatility picked up. Maybe people want a little more protection, play a little more defense as you have stocks sitting at all-time highs. You also had REITs hit highs as well. I'll use the ICF. You can use anything. There's the ICF, the XLRE. Vanguard has one we use. And so REITs up about 1% on the day. Yeah, not bad there. You had lower rates on as well. So if we take a look at the bonds, bonds got a little bit of a bounce, meaning rates took a break from pushing the new highs there. So that helped the utilities and the REITs today as well. They've been stuck in this downtrend now. So if you're trying to kind of time this thing, you go, all right, if rates continue to decline and bond prices continue to go higher, where's our trend? Here's your trend right in here, right? So you've got some room for this to continue to bounce and still be in technically a downtrend, which could be some good support overall for the real estate and utility stocks. You got regional banks pulling back here just a little bit today, down about 1%. Overall, it's still in the midst of an uptrend, looking very good there, solid in the short term. Just a little bit of a pullback today. Things took a little bit of a break in that category there. Communication services hinting at that possible breakout. Will that be the next sector to break out? We've been trying to point out the different areas that have been slowly trying to break out a little bit there. A little bit higher today off lows. A lot of it's going to be because of Disney. That's also the reason why the Dow was higher as well. I didn't cover that a second ago. Disney makes up about 4.5% of the XLC if you happen to look at that. So the good results from them, subscribers that they got yesterday, just incredible. Helping, but unfortunately because of that, Netflix is also in that category as well. Because of the Disney news, Netflix had a down day today of about 3%, and they also are about 4.5% of the XLC, and so you can imagine you had some great strength, you had some great weakness, and overall it's basically a wash for the XLC here this week so far. Consumer staples also hinting at a breakout. They could be the next area as well. Basing up here at the highs, just back and forth, real tight range starting to develop there. So a lot of people are going to be paying attention to that. Today had a good day, almost up 1%. And so if it gets up over to those highs, you got to imagine people will be excited about consumer staples again, because it's been kind of quiet, right? It's been sort of like not a whole lot going on there. Also, always looking everywhere. I just thought I'd point out Mexico. If you happen to be invested in any Mexican of the bigger companies in Mexico, or just playing along in the ETF, that pulled back to the 200-day moving average today. Also acted as a good amount of support. You could see the bounce just a little bit off the 200-day, although I wouldn't think this just turns around and rockets back higher. Just kind of nice to see some support stop that recent sell-off there. All right, some of the individual stocks in the news today. Tyson had a good start to the day. It finished basically flat, continuing forward with their earnings. Remember, the CEO yesterday said that the momentum in the alternative meats, plant-based meats category that they really pushed into, going well, and they expect that to continue going well going forward. We're happy with that. We happen to own Tyson in our portfolios here, so happy with that. The focus was on Disney, 7% gain today, which, like I said, really helped the Dow overall, keep that pushed higher. They got 10 million subscribers all in one day. Could you imagine that? I mean, they needed that kind of response. They spent billions of dollars, $3 billion on the tech and the content that they produce. We mentioned yesterday, but they got 10 million subscribers in the US, Canada, and the Netherlands. That's all was available. Wasn't available worldwide. We took a look at Netflix's last earnings report just to see how many subscribers did they have in the US here. They have 61 million subscribers. So in one day, Disney was able to grab 10 million subscribers. Obviously, you can understand why Disney's kind of shining here, and Netflix got a little bit of a hit today, which is good. I know some of you have Disney. You've been waiting for that thing to pop, so congratulations. Looking really good. We happen to own that one as well, so we're happy with the Disney performance there. Okay, a couple other things. Luckin. So this is a recent IPO. It's a Chinese coffee shop. Think of the Starbucks of China. So the stock was higher today by 13%. Yeah, 13%. They beat on earnings. Revenues came in better than expected. They raised their guidance. They are very positive going forward. It was a smaller profit decline than expected, so also good news there as well. Remember, they're still losing money. I mean, it's not yet a profitable company. They're in hyper growth mode. Basically, a lot of the analysts came out upgrading stocks, initiating coverage today. There was a lot of good news around Luckin Coffee. And a lot of them have said that they will now be bigger than Starbucks by the end of the year. So we got like 6 weeks left to go. They think they'll be bigger than Starbucks in China by the end of the year. They added 717 new stores in China just in the last quarter. That's pretty impressive. I don't know how many that is a day, but that's pretty impressive there. They now have 3,680 stores. They're shooting to get to 4,500 by the end of the year. Starbucks has 4,150 stores in China. Starbucks was still higher a little bit today. But remember, with Luckin Coffee, if you remember from their IPO, they got a lot of attention. They're not like Starbucks. Their whole goal is not necessarily to get you to come hang out and enjoy the experience. They build smaller stores, so they're building a whole lot more, and they also are focused more on this mobile sort of ordering service. They want you in and out. They want you to just come get or have your coffee delivered and be on your way. They make their money and they're done with it there. So it's more of a fast kind of in and out versus Starbucks is more come set up your computer and write a manuscript for a new play or something. I don't know, whatever you do in Starbucks. I don't really, can't say I go to Starbucks. Have gone to Starbucks. My daughter goes every day, though. She's probably helpful for that stock. All right, Canada Goose. Stock was lower today by 10% on the day. They issued now this is sort of weird here. They issued a warning on their guidance going forward with the wholesale revenue. The reason they did that is because they shipped a lot of their product early, so it kind of got forward priced into the overall revenues there. So that was one of the reasons the stock fell a little bit lower on the day. Volume way above average today as that fell 10%. So if that helps you there. Smile Direct Club, remember this was the worst IPO of the year in terms of performance. Lost 28% on its first day. Lost 20% today, so almost doing that all in one shot. And when I say worst IPO, I don't mean worst IPO of the year, period. I mean the worst IPO out of these hyper growth, no profit type companies. They just went public, said, don't worry about it, we'll make money eventually. This was the worst performer. It lost 20%. On the day. They lost more than expected. Revenues were a little bit better than expected, and they tried to raise guidance, but look, they lost more money than expected, and they don't make a profit already. So it's a tough one. It's a cool concept, but it's a pretty tough one there. Stock was lower by 20%. Also, we don't know how many shares are actually out there. They're depending on where you look and what reports you check out, there's a discrepancy in the number of shares that they have there. And that's a concern that I know they're talking about. Everybody's trying to figure it out. But that's not good news when they can't sort of clarify that there. So the stock was lower, probably deservedly. All right, Nike was higher by 2%. They announced midday that they are no longer going to be selling on Amazon. That's it. They're not going to sell directly on Amazon there. So the stock was a little bit higher, 2%. There's a lot of concerns about counterfeits and things like that. They tried. I mean, I remember when they launched it and they were going to really work with Amazon. I guess the deal didn't work out. So either way, Nike's still a little bit higher. Also could be part of their exclusivity sort of initiative that they're working on. The Gap down 2.5% today. Barclays initiated coverage on the stock. They said underweight, which is their way of saying they're not very excited about the stock. They said that they have excess supply issues and they're just not connecting with the younger crowd. That's going to hurt them here in the holiday season as well as going forward. So the stock was lower by 2.5%. Remember, they also lost their CEO as well. So That's the gap, and you can't see it on the chart. There you go. So down here near lows, just kind of floating around, looking for some better guidance from new leadership there. So far, nothing to speak of. In the S&P 500, you got 64.7% above the 50-day moving average. Almost no change. 64.5% yesterday, 64.3% the day before. Almost no change there, and that's just attributable to the market sitting at highs. There's low range days. A lot of stocks are just kind of fluttering around, not doing a whole lot. You have some big hit names like Disney that are exciting, and everything's good there. Overall, just pretty quiet. You had 43 new 52-week highs today. No, you didn't have 43. It was 26. All of them, except for one, were positive on the day. Actually, the one that wasn't positive was Fortinet. The one we've been talking about here didn't come anywhere near the stats play there. But you can kind of understand why it was the one negative on the day. It's just overbought in the short term here. So not a lot of people willing to continuously push that one higher after the run it's had. Since coming out with earnings there, it's up over 20%. So gives you an idea, and 20% in just a short period of time is not going to be very helpful. Some of the other highs continue to be tech and semiconductor related. You got KLA 10 Core, CLAC is a ticker symbol there. AMAT also hit new highs. AMD also hit new highs. Strong day for AMD, 2.2%. And Apple again hitting new highs, just chugging along. Real slow and steady here with this Apple, up 1% on the day. And also you have the healthcare names. Celgene. We've been talking about this one. It's been on the new high list here for the last few days. Continues to make new highs. BMY was also on the list yesterday. That one also making new highs. Sticking with the tech sector, you've got WellCare, WCG, the ticker symbol, at new highs, and Vertex. There you go. Also at 52-week highs as well. So healthcare, really good supporting backbone of the recent slow, but still record high rally that we've seen. All three that are on the new low list today were on the new low list yesterday. You got Occidental Petroleum. Oh, there you go. Occidental Petroleum, Fossil, and Expedia hitting new lows. All three of them were on the list there just yesterday. For our stats plays there, you got CVS. Came close, but no cigar there, right? The other day, yesterday, it tried to move back into those lows. Got really close, but can't count it. Didn't officially hit that low there. We don't really mind because we own this stock as well here at Jazz, so totally cool with it, just continuing higher. You got to keep in mind in the short term, though, it is extended, although it didn't pull back exactly how much it was supposed to pull back. Still extended in the short term, so if you saw some down days there, it took a break, and the market's pulled back a little bit, you got to expect that that's going to go along with it. And so there you go. Cisco reporting earnings here. Now, we talked about this yesterday. They typically beat on earnings and revenue. They're very, very consistently, to be honest with you, on earnings. They beat 93% of the time, 89% of the time on revenue. They did the same thing actually today. However, what we talked about yesterday, you don't want to see them lower guidance. So after hours here, the stock is down about 4.5% after hours. They guided lower. They guided lower on earnings and revenue. The last quarter, we talked about this yesterday, last quarter that they lowered guidance, which was actually last quarter that they lowered guidance, the stock gapped lower by 6.42%, but it gained 5% over the last 3 months, so it was a little bit of a rally there, and that's basically from right here. So when it gapped lower, this is how we measured it. You had the gap of 6.42% on earnings, but from that gap to where we just were was about 4.4%, right? Just over 4.5%. Let's call it 5%. The last time that it lowered guidance previous to that was in 2016, and it gapped down 2016 it gapped down 5.26%, and it was flat for the next 3 months. So we were basically measuring quarter over quarter performance after reporting lowered guidance there, and then we went back and looked at the last one. Anytime they lower guidance, the stock tends to get smacked a little bit. It's down 4% after hours, right? Yeah, down 4% after hours, around 46.25. That puts it all the way back towards this support area, right around this area right in here. So tomorrow morning, looking like Cisco is going to open just a little bit lower. Your pot stocks are in the news this week. I know a lot of you are hoping these things bounce, but there's just no reason for them to bounce here, and that continues. Tilray reported earnings. They're a little bit lower. Kronos reported earlier this week. They continue to sell off, down 7%. Remember, Kronos is trading at 52 times revenue. That's a lot. I said, I will sell any portion of Jazz Wealth that anybody wants to buy for 52 times revenue. If you're willing to pay it, I'm willing to sell it. And you can have the whole business if you like, but no takers, because that's ridiculous, right? keep that in mind when you're buying these stocks out there that are trading in some considerably overpriced sort of position. Canopy Growth reports tomorrow. They were down 4% on the day. All the pot stocks were down lower on the day. And that's basically all I have to offer for you today. Tomorrow we've got earnings from International Gaming Technologies there. They make the gaming machines, and I believe they make lottery tickets too. You got a lot of Chinese names. Sina, Weibo, and what was the other one there? Nope, that was it. Sina and Weibo. Walmart reporting tomorrow. Applied Materials, which was on our 52-week high list today, reporting. Dillard Stores, I didn't know they were still around, reporting as well. Helmerich Payne, NVIDIA, and Williams-Sonoma, one of the retailers, reporting tomorrow as well. You have 1, 2, 3, 4, 5, 6, 7 Fed members that will be out speaking tomorrow. Jerome Powell will be speaking in the House Budget Committee, so kind of continuing what he's been doing today. Today was prepared remarks. Tomorrow, more grilling from him. And 6 other Fed members out there delivering their message of everything's good as it is. We don't have to cut rates. That's exactly where they want to be. Dividends coming out. Simon Property Group's paying $2.10. Amgen, $1.45. Whirlpool, $1.20. Sherwin-Williams, $1.13. Duke Energy, 95 cents. Honeywell, 90 cents. Smucker's paying out 88 cents. United Technologies, 74 cents. Eli Lilly paying out 65 cents. We own just about all of those here at Jazz Wealth, so dividends coming your way. And also, Dean Foods went bankrupt. Which means they're going to be out of the S&P 600, and the replacement for them is going to be Kinsale Capital Management. So that's the reason for the gap up on that one today, up 11%. They're going to get their spot in the S&P 600 now that Dean Foods. Oh.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new?
Come on, man! Now that Dean Foods is, yeah, here we go. Dean Foods is kaput. Just couldn't do it. Dean Foods going bankrupt because of the sort of almond milks and things like that taking a lot of their market share. And it's not working out for them. Anyways, that's all we have there in terms of what to talk about today. I'll take your questions if you happen to have any. And I realize you can't see me there because I'm pressing buttons I shouldn't be pressing. There you go. Sounds good. I love it. I love it. I love it. This silly welcome financial investor. Sorry about the mess up there. Questions are still trying to catch up there. We covered the 10% drop. Yeah, I see. Yeah, sorry, the questions are just kind of like catching up for some reason. Nice. You guys are talking about iRobot. Oh, you're talking to each other there. I got you. Time to sell Cisco. Well, it's kind of going to be frustrating if you hadn't sold it already. It's going to open down at lows there tomorrow. And I just wanted to give you some of that performance after reporting lowered guidance from previous quarters, just to give you an idea of kind of what to expect stock-wise. Doesn't look like you're missing out on anything by holding the stock, you know what I mean, after they do things like that. We covered Disney on the old streaming wars thing, but I don't have much other insight in terms of that. And a cat waiting for that 10% drop. I know a lot of people. It's the weirdest market, right? Because every one of us seems to want the markets to go lower. It's like the only time in history we're all frustrated that the markets are moving higher. We're all sitting here waiting for a discount, and it's just not coming. So another day. We'll see what happens. Any good dividend buys off the top of your head? There's a lot of good dividend funds out there. Might save you some time from trying to research individual stocks. That's yeah. When am I going to get some poor unpaid intern to sit and run the board? Yeah. Well, I don't know. You volunteering? Typically, I'm okay with this thing. It's just, there's a flow. And by all means, if I go outside of that flow with all this gadgetry that's sitting here, I'm in trouble. I'm in big trouble if I go outside of it. Patrick, thanks for watching. I appreciate it. Appreciate the show, and I love it. Good comments there. Yep. So iRobot, you got the same concept going on here. Give me something. Like, remember, anytime you go to buy a stock that's selling off, right? Like iRobot, you can see it on the chart there. Obviously a declining stock, not great news lately. It's pushing lower. You think discount, but you got to have something. Imagine that you're running money for me. I gave you some money. I said, go manage it, do the best you can. How do you justify buying a stock like this right now and you got to come back to me and tell me a good reason to buy this stock. I just don't see it. I see what's happening there. I just, I'm not like really allowed to give my opinion and stuff, but if we're talking in that context, you're managing money for me, give me something. What do you got? And I don't see anything. So it's a tough one. Yep. You've got some Amazon stock from over 10 years ago. Should you sell now or wait? You're afraid of losing all the money that you saved. Well, if you bought it 10 years ago, that'd be a pretty impressive drop for you to lose all the money that you've built up in terms of unrealized gains. So that's a tough one. I wouldn't fear that I would lose all of it. Surely it would have little pullbacks here and there. They're going to have, maybe a good holiday season, bad holiday season. Either way, it's not going to get you back to where you were 10 years ago. So I'm not sure. Also, it's the end of the year. I'm not sure do you want to volunteer that taxable gain going in here? What's wrong with just selling a little bit, right? Taking some profits little by little as it pops. Just out of that. What percentage would you recommend to keep in cash at times like this when the markets are at highs? I'm not really one of those that says you sell and raise cash and stuff. Now, I get that way when the markets start to really rapidly accelerate. We're just not seeing that yet. I know there was a study just done, where did I see it? Bloomberg or something, where the rich are apparently starting to hoard cash more and more and more and more, selling off property, selling off assets. They've been moving into this cash position. So they can afford to do that because they still have a sizable chunk of their nest egg growing and they're not, pinching every penny and all that. I think for us, we're really just hoping for the pullback so that we can buy cheaper, right? The weekly deposits that our customers do or monthly or whatever, you're just kind of hoping you could buy cheaper, just like anything else. You want to buy a shirt, a sweater, whatever it may be, as cheap as possible. And right now it's just costing you top dollar. Oh boy. Somebody go buy Beyond Meats and help that thing bounce there. Everybody's, I guess you own some Beyond Meats. Yep. What about gold instead? Is that a thing? Yeah, it is a popular thing. I've done studies on that in the past to kind of illustrate how gold is more of a, I know this is tough to say, but it's more of a short-term sort of active position that you might take. To buy gold and hold is really a tricky asset class to try to participate in and make it worth your while relative to taking a little bit more risk and spreading out in other areas. But could you? You certainly could. I don't see, it's a tough one. You're kind of asking for more excitement there in terms of people thinking the economy or the markets are getting a little bit weak, especially globally. But in dollar terms, gold, that's a tough one. Yeah. Silver, another one. I know I get a lot of questions on that as well. All right, well, we've pretty much done what we needed to do today. I appreciate you guys stopping by. It takes quite a bit of work to put this show together, so all your support, hitting the subscribe button and the thumbs up button, I love it. I thank you for that as well. And we'll be back again tomorrow to do this all over again. Enjoy the rest of your cool evening, I hear, all around the world there. You can tell I got the sweater on, so it's a little chilly down here in Florida. And enjoy. We'll be back tomorrow, and have a great day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.